Hello guys, this is Pedram Raufi from Gerchik Co and you're watching the market review for today, and you're actually going to make some analysis for midterm for those traders who trade midterm charts. And we're going to start from the stock market. We're going to continue with Forex pairs, and we're going to close today's review by the analyzing of the situation on the cryptocurrency market. Maybe some news as well we have. So we're going to check all of these impacts and economical background as well. So first of all, maybe it would be interesting for you to start from some poor news background which happened during previous week, or maybe previous before that week. There's not much changed actually. There's a problem with the crisis which we had, energy crisis, inflation, war which is going on, and of course the food crisis, and some new things that may be happening because of COVID-19 spreading again around the world. We can actually kind of get ready for markets to maybe get into another phase of recession. But let's check the technical situation for now, for today. And we're going to actually start from the United States stock market. And as we can see, due to the situation which we have on the chart of S&P 500, we haven't yet reversed from the bottom of the market. But if you remember, we gave you different levels which could get retested, different supports which could get retested, and after their retest, mostly prices have to reverse. We told you those levels for S&P 500 were 3,800, 3,600 maximum. And as we see for midterm, these two levels actually are working. They don't let prices to fall further. So here we had previously the retest of 3,600, and the next reversal, which continued for 2 weeks, maybe, or 1 week and a half, something like that. And for now, we have a really strong pressure on the prices. So we cannot really say that in the near future bulls could do any kind of thing on the market. Bulls could maybe rise or something like that. Prices mostly have stopped after the retest of a mirror level, which is a really important actual level. 4,000, 3,900 are the main levels for prices. For months, maybe they're going to be the main levels, because above these levels there would be some chances for a further rise. But while we're under these levels, and while prices actually don't have any kind of power to, or any potential to rise further, and they're actually located under these levels, mostly we cannot say that prices are going to, for example, continue any kind of upward movement in the midterm. So mostly the only thing that we can say is that there would be some speculations, for example, upward speculations, bullish speculations, the retest of 4,000, the retest of 3,900, for example, yeah. But after that, prices mostly are going to continue to consolidate inside the phase which we are observing now. And about the Dow Jones Industrial Index of the United States stock market, you're gonna see what's going on. Mostly the same picture, mainly the same movement, even. And 30,000 was the level after the test, which we told you that prices mostly are not going to go lower. They're not going to fall further, because that's a really important level. That's a really important psychological level for Dow Jones. And we told you that prices mainly are not going to even break through this level or get stuck under it. And the main thing that we can see is that prices kind of got a less amplitude of movement. They're under the pressure. So bulls, mainly bulls, I mean buyers, are mostly under the really high pressure, and the only good news is that prices are above $30,000. So industrial index mostly, the price action of the industrial index is going to be a little bit more conservative than S&P 500, because S&P 500 is an index which had a real high impact of the money simulations of the White House during the COVID pandemic, if you remember. But Dow Jones is mostly industrial index, and it's going to get mostly the impact from some industrial recessions, or if we get any better situation on the markets, for example, due to the industrial factors, or if we get any good signs of rising industry. Mostly, the only thing that maybe nowadays would help many countries and continents, I mean Western continents, to kind of make a higher income from the industry is defense industry, which is now kind of getting really important because of the Russian invasion, because of the Russian aggression, and due to this resistance of Ukrainians against Russians. Most Western countries now are understanding that the situation is really serious. So if Ukrainians are not giving up, they don't have to, mostly, and they kind of need to think about the defense system, because they're kind of a little bit not even improved during last years, even due to the Russian invasion of Ukraine. And because of that, they actually have to nowadays, because they're now sending Ukraine different type of artillery and war component. They actually need to do something with their own army, so they need to improve it, make it better than the things that they're exporting. So here is a factor that maybe could help industrial indexes of different countries, but main indexes like S&P, they could be under pressure because of the inflation factor and the Federal Reserve System monetary policy tightening, which is actually kind of continuing, but it have to actually end as well. So there would be some problem anyway with job market. If you remember, we told you that from maybe 3 months ago, we told you that there would be some problems with job market in the United States, which could start after the first quarter of the year. After the second quarter of the year, mostly they're gonna start. They're related to the situation of post-pandemic, that actually stimulus is going to finish, and companies need to have a real incomes, not only the stimulus which are helping them. They need to have a real income, but they don't have it, and they need to fire many personnel, which is now happening in big companies. And actually, this firings is one of the bad signals for the job market. And because of that, Federal Reserve System actually need to know, and it actually knows, that it can tighten monetary policy further because of this factor. So we'll just keep it in the mind. We're gonna check the situation on the Nasdaq. High tech index of the United States stock market. 11,000, not further, as we promised. We actually break through 11,000, we test 11,000, and you're not getting under 11,000. We're actually rising above it, but the amplitude is really low. Movement is really, really weak, and we can actually say that for S&P, even for Dow Jones and for Nasdaq, during the next weeks, we are going to have some downward impulses. We are going to have some retests of the local minimum. They are mostly going to be really impulsive, so you won't trade on them. Mainly here and for now, you can actually think about the long-term investments into the stock market of the United States. But to think about short it, but you won't. Maybe you won't just get to the trend. Maybe you won't just get into it because that's a reversal thing now is happening on the stock market. You just need to wait for it to reverse and go higher. So before we get to the DXY, the United States index dollars index, we're gonna actually share with you about some news that from yesterday, from the start of this week. Euro prices equals dollar prices. That would be some fun thing would happen. Yeah, nobody even could think about this, but mostly I knew it because if you know, United States, as we actually told you from maybe half a year ago, maybe even a year ago, that due to the pandemic, many countries approved different type of financial stimulus, which means that they are actually just typing money, typing it, and typing it, and just publish it and just give it away, which is an actual bargain for economy. I mean, for people to economy, but that's not good for short term, even long term. That long term, which is a short term, I mean, for economy, different type of long term trends could be kind of a short term actually. For example, after the crisis of 2008, it was actually a crisis that lasted for some years, but the most economy is about some 100 years. Yeah, so it would be short term for the whole economy, but but that's actually continuing for the long term. And high inflation made many currencies to lose the prices, to lose their own weight. For example, euro, for example, United States dollar. But as we told you, Federal Reserve System is the only bank that we're going to hike interest rates and tighten the monetary policy first and before any other bank. For example, before European bank, before Australian bank, maybe even before British bank, I think. And this helped United States dollar to get stronger than euro. And this strongness nowadays feels, and as you see, euro and dollar now kind of in the same level. They kind of cost equal. Some fun moments which we have for now. We can actually check all of this charts. We're going to check the chart of euro. We're going to check the chart of dollar, the other forex pairs, and before that, we need to check the situation on the economic calendar of the this week. So today is Tuesday, and we had a little amount of releases left for today. EIA, Energy Agency, International Energy Agency, short-term energy outlook. There's no predictions here, unfortunately. Bank of England Governor Bailey speaks. Andrew Bailey. Nothing more. So maybe some volatility hike. We could have some higher volatility for today for oil or for British pound, maybe. Let's see what's going on tomorrow. New Zealand Bank, Reserve Bank, is going to hike the going to hike the interest rate. So pay attention on this. Maybe tomorrow at morning, early morning, due to the GMT time, or actually today at night, midnight, by the GMT, we are going to have some high amplitude and high volatility for New Zealand dollar PB. From Britain GDP, the gross domestic products releases tomorrow. There's no predictions, unfortunately. Manufacturing production from Britain, which is getting better. Some good news. Monthly GDP, no prediction. Core Consumer Price Index, which is not changing from United States. Tomorrow is going to release month by month. Actually, it's kind of maybe rising. So too many releases and no effect mostly is going to be tomorrow. Okay. Crude oil inventories. Yeah, great. Another deficit of the oil, which could be good for prices. Don't forget that they actually released some new analysis from Morgan Stanley, if I don't make mistake, or one of the analytic banks of the United States, who said that prices of oil are going to even rise to 280 or 300, something like that. And that would something really, really surprising because, as I think, China, as a biggest importer of oil, is really not interested in high prices. Even nowadays, we see that, for example, Iran, which is a kind of partner, China's partner first, Russia's partner at least as well, it's kind of trying to lower the prices of his own oil so he could sell it to China because Russian oil is kind of getting pricey because of sanctions. And China is actually a country which is interested in the lower prices on oil. So even if we are going to have any speculation for oil prices to that levels, before that, I think China is going to mostly, by the help of, for example, some wrong statistic of COVID spreading during around across the country, would try to, for example, say that, oh, sorry, we're gonna close again. We got lockdowns again, and we don't need your oil again. So sorry. So before they maybe gonna order a big amount of oil from Russia or from other countries, maybe they're going to make another quarantine for a month or for a month and a half, and then they're gonna buy the oil. So this would be a great strategy, which is China actually using it. Bank of Canada interest rate decision rising too much. So Canadian dollars actually could be bullish this week. Crude oil inventories, I have already told you, because of the crude oil inventories deficit, mostly Canadian dollar has to rise further as well. Bank of Canada tomorrow has a press release as well. So Thursday, employment change of Europe getting harsher. Initial jobless claims of United States, no change, no change. That's some that's not great signal for United States job market, because initial jobless claims every week they kind of they have different releases every week, and you can see like a little by little they're kind of getting better and better, but the difference between the actual numbers and previous numbers are like about 1,000 or something like that. And this means that actually the chart of the initial jobless claims index is kind of maybe getting into a curve which is going to go down, which means that, or actually getting to a curve which is going to go higher, which would be a really bad situation for an economy, because of what I'm telling you, that the Federal Reserve System is not actually going to hike monetary policy in this wild manner. Producer price index, obvious. And the last day of this week, China's industrial production, not so good, and the GDP as well, not so good. Core retail sales from United States at Friday getting a little bit better. Retail sales, United States getting better. So we had we had actually see the economic calendar this week. We're going to get to dollar indexes prices and let's see what's going on. So as we told you, the price of dollar are going to retest 108, maybe 10. Before that, while we were talking about United States dollar were moving somewhere near to 106, I think. And then, as you see, we have a gap next jump. What does this mean? This is exactly the same picture on the S&P 500. This is exactly the same picture on any index of the stock market, which is actually on the dollar index as well. When a gap opens and the price, for example, move really high and just will literally close the potential of movement for a week, which happened here, which happened here, which happened here now, it would mean that country is not interested for markets to get money speculative on them. So regulator is doing everything that he could to don't let market speculate on the prices. They just that's their own play. So any big player, any little player won't even play here because the regulator don't want it. Regulator make these movements during the, for example, during Saturday, Sunday, during so the gaps are opening during the Saturday and Sunday. Due to the 1 hour chart of dollar indexes, if we can assume, here we had already a really great downward impulse, which would mean that prices maybe are going to continue to move inside some channels. So for further picture, I can say that 107.50 is going to get retested. 107 could get retested as well, but most prices are going to strengthen above them and just go higher. So I don't think about 107. I think mostly about 107.50. And after we test 107.50, prices are going to reverse and continue to rise. But don't forget, prices have already made their upward potential. They've already go through the upward potential which they had, and this upward potential is going to actually close. It's going to actually close, and because of that, during maybe this week till the end of the week, we are going to have just a movement inside the channel, and this channel is going to be somewhere around 107.50, 108.50. So this would be channel inside which during this week dollar is going to consolidate, and at the end of the week is going to actually go high. For for example, maybe some several weeks after that, United States government actually have to do something with the bad impact of the monetary policy tightening. So we're going to see what's going on with euro prices. Yep, one. Amazing. This reverse doesn't mean anything. This reverse doesn't mean anything. It just means that bank is not interested for euro to be in equal price with dollar. And yeah, that's actually is go here. And now we're going to see for future, so you would know. above one, above $1, you can actually see the observe the speculation of the central banks. This would be speculation of central banks. Do you want to play with it? I don't think that anybody is interested to play with that because that's really a strong thing. But Here 1 and 10 is going to be the next level. After the retest, which prices are going to return again into the consolidation movement. So 1.10, 1.01 to 1.10 is going to be channel inside which prices are going to uh, speculate. Consolidatively, just to speculate, just inside the consolidation, they're going to continue to move. And lower, I don't think the prices are going to fall because this is not the interesting thing which should happen for European bank. But uh, this movement here is kind of making me scared about the continuation of downward movement in the near future. So be ready for that. But for now, maybe for during this week, we are going to have just a continuation of a consolidation movement between 1 and 110, not further, not lower, not higher. But after the price could actually get under 1 for a while, which would be really funny. So the British pound, $2. 1.18 have been retested. It was an important level. It was a target level which have been retested. I don't think that prices are going to move that far upwards. So 1.90 is the last border which I can give, 1.90. Then they're going to actually continue to consolidate further, and I don't think that they're going to go higher. They're going to actually reverse and get lower because pound has potential for that. It's going to go with the Australian dollar, the same situation. 0.7 is 0.67, 0.6750 are the is a channel. I'm sorry, inside which we move, and 0.6750 maybe, yes, 0.6750, 0.6750, let's say 0.6750 is the most important level. So if you're under this level, nothing good is going to happen with Australian dollar. If we get above this level, this would be something good. Don't forget that here we have already a convergence, kind of a really mild convergence, but you have it. But even despite this factor, I think the prices are going to go lower, going to fall further. And the thing that we have now is just a speculation. The upward movement of euro, pound, Australian dollar, New Zealand dollar, just a speculation. New Zealand dollar to United States dollar. 0.61. Use the 4-hour chart. We can actually see the situation, which is going to go on for a few 3 or 2 days further. So mostly there is a downward channel, but don't forget that the levels 0.62 for example or 0.6150 are really powerful. So prices are not going to break through them or get strengthened above them. They would just only retest them. But this would be a speculation. And if you work intraday, if you work with scalping, you can actually make something from it. But that's not going to be a long-term movement. It's not going to be a mid-term movement even. It's not going to be even a short-term movement. It just would be a movement for 1 or 2 hours to just get the prices to 0.62, 0.6150. This would actually happen for Australian dollar, euro, and pound as well. But after that, prices are going to continue the consolidation first and then go lower. Let's go and see what's going on with the energy market. From previous time, we had retested 100, get a little higher, and impulsively retest 100 again, and now impulsively retracing it again. What is going on around the world? Mostly the only importance factor that we have for now is that Russia's kind of demonstratively showing that it's not going to give oil or gas to Europe. As you know, that's a demonstration because you actually need to know one thing for sure. Even during the war from 2014 till now, during the war of Ukraine, which is now actually continuing for 8 years, if you know, on the east of country, during this war, Russia transit Russia had transiting oil and gas across the Ukraine to European countries, and now it's happening as well. It's called the reverse gas or reverse oil, and the things that such countries like Russia do mostly that's demonstrative. It's just demonstration. They're not gonna do anything which would be bad for their own economy, or not the economy, but for their own pockets, as we say. For the economy, they actually ruined the economy of Russia, but for their own pockets, and for their own pockets is really not so good to close this faucets of oil and gas to Europe. Uh, what we have now for today on the charts of oil, it shows that maybe inventories is getting a little bit higher, but tomorrow's data's, tomorrow's releases from United States are not really good. They are showing that we have a really high deficit, and because of that, I don't really believe that oil is going to fall further. So every downward movement which we had here, like this one which is now going on actually, is just happening to make markets to believe that prices are going to go lower, but they are not. We are retesting a really important support of 100. We have retested this level for previous 3 months. We are retesting this level impulsively, and mostly we have a really high price pressure, volatility pressure here. Are we going to get lower than local minimum? We could, but this is something that would happen to just make you believe that prices are going to go lower. So the only thing that I believe is that let's see how prices are going to retest 95. And if the amplitude gets lower around 95, this would mean that prices could actually make some pattern like here, which would make you wait if you are a buyer, to make you really wait to think about to get out of the market, to just to, for example, lose this positions, to just give up and then go higher. So if you observe amplitude lowering around $95 in the near future, this would mean that prices are going to do something like this with you. If you're a buyer, if you're a bull, and you just need to wait for it. Impulsively retesting of 95, this would be exactly the same signal. So prices mostly are going to stop around 95. They could get under even 95. They could do something like this under 95. This is the how we say the pattern of reversal. This is different type of channels and wedges we have. For example, downward wedge or downward channel. The channels and wedge are just only the demonstration of price volatility shrinking. Price volatility shrinking and price volatility lowering or amplitude lowering. This would mean that there is some pressure on the market. There's some unknown moment on the market, which would mean that prices are going to reverse. That's a reversal sign. And when you're around the bottom of the market, when you see a downward the downward wedge or downward channel, this would mean that prices are going to reverse here, as here. And if these kind of patterns simultaneously uh, appear with the formation of convergence between minimums and the line of oscillator, this would be another great signal of the price reversal. So here we could have the same situation. So maybe for some days, maybe for some sessions, we are going to stuck around 97, 95. We don't know what to do with it. But mostly I think that we are going to have the same situation and then reverse back and rise again. So due to this factor, we're going to see what is going on with United States dollar and Canadian dollar and Mexican peso. But before we do that, let's see what's going on with gas prices. Gas prices have already reversed from those local minimums about which we told you. I don't remember, did I told you about the $5 and $5.50, but this was a really harsh situation when I was watching to gas prices, and that was getting lower, lower and lower. 7.6, I was kind of really disbelieving how they can actually go that low. So here we can say that economies which are so related to which are so dependent on gas imports have done their job, and now they are actually ready for the price upward movement. So here, unfortunately, upward movement is really impulsive as well. And for the continuation of this movement, we just need really bad factors. The main factor is that for now, for today, we don't have any kind of sanctions continuing or opening new ones. We know that European countries really need gas, and Russia is just demonstrating that it's going to close the faucets. It's not going to do it. And as we know, Putin don't want to die. So, and because of that, mostly this is a reasonable downward movement which you have on the gas prices. So as we know, within a month or something like that, a new land lease program is going to get into work, and there would be high range missiles in Ukraine from Western countries, and this would kind of make situation a little bit bad for Russia. But are they going to really close the faucets to these countries, or they're gonna just trade with them anyway, as they trade, for example, today as well? So about the gas, I'm a little bit getting suspicious. I don't think the prices are going to rise that much. We have an upward channel which is forming with a really mild divergence. That's not a good sign for bulls. And we're retesting a mirror level of $7. So here we could get a lowering amplitude. Here we could get an impulsive retest and just a continuation consolidational movement. Not a rise, not a fall, but not a rise as well. So the situation could really get a little bit the same as United States dollar to Japanese yen, which is a really mild upward movement, which is continuing, which is really low amplitude, which got a really low amplitude, but it's continuing, yeah. So for gas, I think the situation would be a little bit like that. United States dollar to Canadian dollar. And the weakness of oil kind of made prices to retest 1.30 at least. 1.30 is psychological level and local max of 1.31. I don't think the prices are going to go higher or even, for example, go higher than 1.31, but they could retest 1.31. They could retest, they have already retested 1.30, which is a psychological level. But they're not going to strengthen further. So that's not a long-term, mid-term trend. You have to get ready for reversal and to get into downward movement, to get into short positions. You have to just get ready for it. And United States dollar to Mexican peso. Here situation kind of the same, but impulsive breakthrough. $20.80. We are going to stock under this level further. We are not going to rise that much. We are just going to stock under 2008 to $20.80, and after we're going to go further, fall further. So here is a good sign of a reversal as well. We have it. Let's get into the commodity markets: gold, silver, platinum, palladium, and some commodity pairs like US CHF, US JPY. We're gonna check all of them. So gold prices have fall further under 1,800. That was surprising because we didn't wait for it. And now prices are actually retesting a good, powerful minimum. 1,720, 1,700 could get retested as well. We have a really good convergence here, the signal of reversal, but this reversal is not going to be that powerful. Mostly during next maybe week, or maybe during this week, we are going to just observe price speculation around 1,700, 1,720, and prices are going to start to strengthen within a week. Maybe during the month, we're going to just observe something like this happening. Just the upward curve, which is a corrective movement inside the consolidated, inside the channel, inside the consolidation. That's for gold. And for silver, we had breakthrough $20, which was a psychological level. $18 now we're testing, $18.80. So $18.50 maybe would be the last border of this movement. And the impulsiveness of the movement is actually another sign of the reversal, which could happen during next weeks, for example. But during this week, mostly we are going to speculatively fall further, mostly, and after a week or two, they're going to observe a reversal, corrective upward movement, get into the channel, and the continuation of consolidation movement for months maybe. Because this movement have been already closed downward potential for months for gold and for silver. Let's see what's going on with the platinum. 900 retested, but we've gone not that far. 850. So here for platinum, I think the prices already are going to get into a consolidational movement, but I will give a channel a little bit wider. 800, 900 is going to be channel, I think, because we are going to retest 800, maybe at least 820, 830, but then we are going to get into channel. And the palladium prices here, as you see, is moving exactly the opposite way, because palladium is a sanctional asset, asset which is under sanctions, and we told you that even if gold prices fall, even if for example silver prices fall, commodity prices fall, palladium is not going to fall because palladium is under sanctions like steel, like coal. These assets are not going to actually make any downward movement because, or get into a downward phase because they're under sanctions. they got a deficit of them on the markets. So 200, 2,200, 2,000 now. We've retested this level impulsively. Mostly we're going to continue to move inside the channel of 2,000, maybe 400, 2,200 or 2,000, just 2,000, 2,400. This would be channel, I think, inside which we're going to move further. And let's see what's going on with our defensive currencies, our defensive, or as we say, risk currencies like JPY, Japanese yen, and Swiss franc. So movement, upward movement continued. We waited for 138, 140 actually, but we got 138 at least. But just look at this movement. This is really, really conservative, and the movement which is under pressure. As we know, Japanese banking for now is not ready to tighten monetary policy, so dollar is going to rise against yen, and that's a real fact. Even due to this movement, which is actually showing us that there would be some reversal, you could say that maybe yes, okay, reversal 133 is a maximum, 134 is a maximum, I think. 134, 134.50 is a maximum downward border. This is the maximum support which we have. Further, we are not going to fall. I think that 134.50, 135 now actually, because really here we are not going to fall that much. Most of we are going to just rise further, but we have to wait for some downward correctional movement. Then prices are going to get into an bullish trend. United States to CHF to Swiss franc prices. Yes, here we can see actually the upward movement which is continuing and is really impulsive. For now, for today, we can say the prices have been kind of done with the potential. 0.98, 0.96 are the levels inside which you're gonna stuck during near future, I think. And let's see what's going on with Bitcoin prices. So we have different type of analysis about Bitcoin, which are not really good. And most of them are telling the price of Bitcoin could actually go lower to 11,000 or 10,000 maybe. Kind of agree with that, but for now, for today, consolidative movement continuing. $23, 27,000 could be get reached, but mostly we're going to continue to fall. So return prices as well, we're gonna see. 1,400, 1,200 could get reached, but mostly we're going to fall. So here we could say that prices in the short term could make some upward movement, but this would be a really short term thing, and after that prices are going to reverse. And actually maybe even break through the local minimums and go further, fall further. Thank you guys for watching this video. Don't forget to subscribe on our YouTube channel and ring the bell so you would know what time and when we have different type of shows for you. Don't forget to check the official site and check the information about different packages we have for traders, for basic, for new traders and for experienced traders as well, for beginners and for experienced traders. There's different packages with a really great sell-off on each of them, and inside of them you can actually find different type of courses, different type of instruments for trading. Don't forget to do all of that. Check the information on the official site and ring the bell and subscribe on the YouTube channel. So till next time, have a good time, good trading, take care of yourself, and bye bye.